It's now my enormous pleasure to have a conversation with three panellists for 40 minutes, all about from risk to return, making nature investable. My name is Fiona Donnelly and I'm Director of Sustainability at ICAS. That's the Institute of Chartered Accountants of Scotland. We've got 25,000 members. And we do so much more than count beans. I just wanted to stress that. People think accountants just do accounting, and we don't. We do so much more. We do data, financialisation, investment, returns, and obviously things like TNFD disclosures gets us excited as well. And very often that has actually been the access point to nature for an awful lot more accountants in recent years. Anyway, I am babbling. Well, there we go. As if by magic, they're all here. Fantastic. So today's conversation is very much about how we're going to try and show how insurance, investment and rewilding come together to make nature restoration projects financially viable. How do you assess risks? How do you mitigate them? How do you share them? How do you price them to make it fair for everyone and make it an attractive project? That is the starting point. So let me just introduce the gents. I'll come and join you here, since I'm not going to stand up for myself. So we've got Simon. Simon leads Jules Environmental Investment Protection offering, specialising in insurance solutions that protect asset value from environmental and biodiversity risk. I had a quick flick at the website, and what struck me an interesting point was they're supporting the value and managing the liability across land and property assets. Then we've got Jeremy Leggett. Jeremy, put up your hand. There we go. Jeremy Leggett, 2 T's in Leggett, by the way. He is a social entrepreneur, most recently founder and CEO of Highlands Rewilding and winner of the 2025 Blue Planet Prize. What struck me on his website, it's all about accelerating and scaling nature-based solutions in Scotland while they're helping rebuild local economies. And then finally, we've got Eoin Murray, who is the Chief Investment Officer of Rebalance Earth, responsible for designing and delivering investment strategies that link nature restoration with business resilience. And this is following a 30-year career in sustainable finance. Aging well, can we say? There we go. There we go. And so basically, he's a natural capital fund manager treating nature as critical infrastructure. There we go. And looks at performance being shaped by the demand for ecosystem services rather than market cycles. Anyway, we highlights this. Jumped out from websites for me. Let's get started. What's going to happen is I'm going to ask a few questions. I have about 1 million questions. However, we felt that was a wee bit unfair. So for the last 10 minutes, we will open it up to the floor. So pop your thinking caps on. We'll try and get to as many as we can in the last 10 minutes. My turn first. So from your areas of work, what is the biggest hurdle to making nature restoration investable, and what needs to change? Okay, why don't we start with Simon first?
These should be working. Are they working? Yeah? Okay. What you need to... Well, there's a number of things I think you need to kind of bring together to create a market. I mean, firstly, you need to determine what a value is. So does society actually value nature? And therefore, if you do value nature as infrastructure, as protection, as life support systems, for example, then you need governments to drive that, and markets can then come to the fore. I think government action, if you look at kind of both England and other countries, government action is key. You need governments to create a system of value, to create a market to offset loss, whether that's through reporting and mandatory reporting and targets, or through offsetting measures such as B&G. If you look at the the English system of BNG, yes, it is not perfect, but you cannot deny the positive impact that has had on creating biodiversity systems in England. The implementation of biodiversity positive measures in development sites and in the growth of standalone biodiversity sites, along with the marketplace, has been incredible. What BNG did is it provided clear, credible set of rules. It provided clarity. Clarity builds markets. Governments created the system and the markets responded. And I think from my point of view, those are the issues. If you create those, you create the economic scenarios for investment, you create the parameters you need to then ensure that. But without those, I think you fail to create markets.
Okay, let's take the question round the panel. So how about you next, Eoin?
Sure, thanks, Fiona. And can I go on record as saying accountants are going to save the world? You heard it from Luke and co this morning, what they've done with Clyde and co in using existing accounting regulations to put nature on the balance sheet. Absolutely critical piece of what we're going to do. I'm going to, if I may, preface my remarks by saying I'm not going to talk about the ecological uplift that is embedded in everything that we do, the positive social impact that we want to have. Please take that as a given. There are many ecologists and people in environmental charities in the room. Rest assured that although I'm the finance wonk on the panel, that is front and center in everything we do. We're also going to take a systems view, which will come as a relief, I hope, to Marion and colleagues in the bioregioning world, in the sense that we are perfectly well aware that food security, energy, water, nature are all linked together and have to be treated in that way. We're not going to buy land unless we absolutely have to. It's a last resort, nothing more. There is no reason for us to buy land, and other people will try and persuade you otherwise. I don't think that's right. Ours is just one model. There are many other flavors available. I would encourage you to look at them all. I think that's really important. Ours is one in which we want to fund nature restoration from source to sea. It's a catchment model. Very deliberately, it allows us to connect up all of the elements of nature and all of the ecosystem services, which we hope will drive a better world. So that's a very long-winded way of coming to what I was actually going to answer, a real question about managing risk, which is to say, I think, from our perspective, managing risk is a function of getting government support in the right place, and that means not just as part of the funding capital stack at the beginning of a project. It also means having government supporting the offtake, and that might be through advanced market commitments or contracts for difference, as we had in the renewable sector back along. Jeremy knows all about that. It means getting that right blend of both public and private finance, as well as philanthropy. Different types of capital belong in different places in everything that we're going to try and achieve, and we must all work together to do that. It's about bringing in Simon and the insurers to make sure that there's tail risk is either transferred or properly mitigated, because that will sit in all of the projects that we do. And then lastly, not quite lastly, it's about us putting in place covenants within the various legal documents that will give our investors, your pension funds, comfort that we're not going to lose that capital. Because our goal at the end of the day is to deliver sustainable returns back to your pensions. They don't want to lose your money, and that's very much on us. And for that reason, we'll also look very hard at demand. So which corporates are going to buy or willing to pay for the ecosystem services that will allow us to invest money at scale? You heard from Marion, the Isla project up in Tayside, nature interventions will cost more than £100 million. That's a lot of money. It also means that you need a very professional management team and governance structure in place, and all of those are also de-risking elements. And that's more than enough for me, forever.
I've got 2 million questions, I think. Jeremy, please, if you could respond to.
Yes, so I thought it might be interesting to give a bit of a personal perspective on the role of insurance in all this. I speak as a social entrepreneur, which is sort of code for being a climate campaigner masquerading as a businessman. That's really what I've been doing for decades now. And when we set up Highlands Rewilding 6 years ago, we did so sort of not wanting to rewild just a few estates, though we are at the moment rewilding 4 estates, but also to try and help the whole process of getting to scale, to create a new industry vital for a livable future. In my case, it's the second effort to do this because I was involved in the birth of the solar industry and watched that go in exponential, and that's a market vital for a livable future. And there are all sorts of reasons why we managed to do that and turn solar into the least expensive form of energy on the planet. And so how do we sort of try and repeat the trick in nature recovery? Because this market, vital as it is for a livable future, we're all here today knowing it's, shall we say, very embryonic, and we haven't cracked it yet collectively. So I, through the work I did on climate change, got to know enough about insurance to be dangerous. And it struck me from the get-go that Howden has I'm surprised Simon didn't say it in his introduction, but you always hear people from Howden say, if it isn't insurable, it's not going to be investable. And we're in the business of trying to get nature recovery to national scale and do it globally. So for that reason, I was absolutely thrilled when Highlands Rewilding succeeded in sitting down with Jewel, company within the Howden Group, and our scientists and their actuaries worked out a policy which is now in place. And we pay a premium. I'm not going to tell you how much, but it's a big premium, but it's worth it. And the reason it's worth it is that this is hopefully the first of a kind. And I'm out trying to encourage all the competitors we have in Highlands Rewilding to do exactly the same thing. So we lose our competitive advantage, but there's no point if you're the only outfit doing it. And so hopefully this is going to be one of the key market enablers that will help us make nature an asset class and get to nationwide scale. We will see. The drama is unfolding as we speak. And of course, it's not the only thing that has to happen. We do need strong action from governments, and that's what actually got us the exponential growth in solar, a thing called a feed-in tariff that many of you will know about. We had to lobby for that for quite a long time, and eventually we persuaded government to bring it in. And so hopefully here in Scotland, depending on what happens after the election, we'll have a collective mood that maybe we could have a compliance market. And unlike in England, where there are signs that the government is sort of beginning to hopefully not retreat, but certainly to constantly rethink the compliance market it's already created, even as they see signs of it working, hopefully we'll do better in Scotland. The game is on anyway, and insurance is a vital part of it.
Game on, live it. Let's pick off the first theme of the session. It's from risk to return. So I think risk is the clincher here, and as you say, if it's not insurable, it's not investable. So risk. We understand. Your tidy investment is something that you know the numbers with a degree of certainty and a degree of accuracy. And maybe short, medium, long term. Equally, you've got a kind of comfortable track record of knowing the facts on returns. But there's just so much inherent unknown in natural assets and so many additional risks. How can you possibly start to measure that and price that and actually give people comfort in that.
Shall I have a stab?
Go on.
I mean, all finance people will tell you that they are great at predicting returns in the future. Of course, that's all nonsense. And I can say that because I'm not in mainstream finance anymore. Everything is an expectation of what might happen. And anybody that tries to tell you what's gone before will predict that is probably lying to you. So that's probably the first thing to say. But you're right, there are lots of complications around what we're trying to do here. And I think that's, for me, why it is absolutely critical to figure out where the risks are in every part of what we're trying to do, use insurance, use tighter legal covenants, manage reputations very carefully in order to make sure we have risk mitigated everything we do. So at the end of the day, if I'm running your collective pension schemes, I know you want the money back, and I know you need some return, and I don't want to live with the fact that I might have lost you some of that.
But devil's advocate, I had a wee look before coming out. The 20-year bond yield is 5.35%. So that's what you'll get back 20 years. So that's your kind of baseline. That's your safe money. So you're looking for better than that, I would argue.
Yeah.
So how can you give people comfort and the risk and the return for better than that? Can we go into more detail?
Yeah, so our promise to investors, and we're very open about this, is a 10% net return over a 15-year horizon, because that's the length of our fund, and that's probably as long as most investors would be willing to give you money. And so we have to be comfortable that we have taken enough risk to justify the premium over the government bond return, but not so much that it puts us at risk of creating downside loss. Downside loss being the critical piece here. And so making sure that whenever we make an investment that we can see offtake demand is either contractually done or is very close to that is vital to ensuring that those returns that we think will deliver that risk premium are there.
So the insurance angle in that, Simon, can you come in and add some colour?
Yeah, so I think it's important to understand kind of what is the role of insurance in all of these, and what has been the role of insurance in the past as well. So I think we forget insurance is so fundamental, yet it's so deeply hidden in the foundations of our economy. We just take it for granted, but it underpins everything we do. It allows you, property insurance allows you to go out and get a mortgage. You get warranties when you buy cars or goods. You get an ABTA protection for flights. You protect yourself with travel insurance when you go on holiday. Yet most businesses and households view insurance as little more than something as fundamentally reactive as a service that is only valuable when things go wrong. But that's not the story of insurance. Insurance can de-risk investments, and because it can de-risk investments, it becomes an enabler. The enabling of insurance has helped drive some of the most important economic and social transitions we've ever gone through. From underwriting global shipping trade to de-risking the introduction of the steam boiler, mass electrification of cities, insurance has allowed society to transform itself in ways that otherwise would have been impossible. So within the insurance industry, we are used to taking on risk which people don't generally understand, which we don't really know what's going to happen, but that is the role of insurance. Our big cousins at Howden Climate Risk and Resilience, they produce some exceptionally good reports. And they produced one recently called The Bigger Picture, and to quote from that, it says, "Nothing gets financed ordinarily without without insurance. But the financing of the largest capital expenditure of all time, the protection of nature-based solutions and the expansion of new carbon and biodiversity credit markets are being attempted largely without mobilizing the power of insurance." And I think one of the reasons for that is that the natural capital market itself needs to understand if it wants to grow from a niche, fairly small market to actually growing to the size it needs to be to meet global needs, it needs to it basically needs to turn into a mainstream economic instrument, something which can attract mainstream capital investment, attract the pension funds, attract the rate it needs to do. And as an industry, we need to start then building the economic models, the governance, the risk management structures, and the behaviors which will underpin the economic and social transaction. Very much what Rebalance Earth is doing, Eoin is doing. So in terms of nature, we need to recognize nature as a class of business in its own right, that it's not really that fundamental from physical risks, from having a house or a car or infrastructure. It has the same exposures, and we need to start treating it as such.
And is that your experience in the market?
Yes.
People have that perception? Yeah. That's good.
And when you sell products out of it, you know, if you sell a product, you've got a product warranty on there. Nobody's selling a carbon or biodiversity unit thinking, you know what, I've got 30-year exposure on that unit. I've given somebody a guarantee. Where am I putting my contingent liabilities, my contingent risk exposures? Am I putting them on my balance sheet? You know, we're not thinking of nature as a proper business, as kind of a mainstream business. And I think that transition needs to occur.
It's interesting how some businesses have got the nature on the board, isn't it? They've got actually representation on the board. It's quite interesting. I noticed in the recent national security assessment, one of the quotes, "Every critical ecosystem is on a pathway to collapse." So it kind of, it's kind of shocking that that's considered a high risk, and obviously that's the environment that every business is operating in. But when you see sort of that kind of assessment, how come there's not more demand for investing in the solutions to address this, this pathway and stop the collapse? I wonder, Jeremy, could you talk a bit about that? I mean, what's your experience of demand for what you're doing?
Well, we're still struggling with demand. There's plenty of supply. We've heard a lot about supply today, but we haven't cracked the demand thing. And to come back to your point about that national security assessment, I hope everyone in the room knows what this is. But just let me briefly emphasize it. It's a report on the state of nature from MI6, MI5, and the armed forces. This is not Greenpeace and Friends of the Earth. And they are saying we are heading for, let me not overstate it, we're heading for a rather grim future if we don't deal with this. And it's about our economies as well. Now, the government tried to bury, not the Scottish government, the one down south, tried to bury this report. It had to be dug out under the Freedom of Information Act. So that's our first problem. We're led by people who are saying they prefer growth to newts and, reducing it to populist slogans. So, we have an outreach and persuasion job to do there. But just a bit of context, and I have to try hard not to sound frustrated when a question like this comes up. I gave a presentation at Lloyd's of London on climate change and insurance. I've always had a sort of business bent in my campaigning, and I talked like MI6 and MI5 are now talking to Lloyd's of London, and I did that in 1993, trying to persuade, as a group of campaigners versed in the business world, to persuade the insurance industry to come to the party. Well, eventually now, and Howden is I think it's fair to say, is the lead insurance company in the world now in facing up to climate change issues and recognizing some of the things that are in that report. But the industry itself is still woeful. Howden is an exception in all this. So we've got a government that is in denial and doesn't want to tell its population about the real threat that we're under. And we have industry that where, the Howdens of the world are out front, recognizing the danger and wanting to do something about it. And we've got quite a long way still to go to get to a critical mass of the survival reflex. That's really what it is. It's a pan-society survival reflex we've got to try and trigger.
This is it, because you hear stories all the time about there being such a huge funding gap, but concurrently there's lots of cash out there.
Exactly.
So what gives money man?
What? Unusually for Jeremy, I think he's been quite conservative with that answer. One of the UN bodies published recently their State of Nature report, and they document 7.3 trillion of nature harmful capital flows on one side versus 220 billion of nature positive capital flows globally. So I'm not at all surprised that the government would try to bury that report. It's about vested interests, it's about power, it's about, if I'm being brutally honest, it's about a need to completely reform our economic system.
Is that all?
Just a wee thing. We'll do it over drinks later.
There we go. Right, questions from the floor. Let me not hog the mic. There we go. Sally, thank you.
Oh, that's nice. I got in there. Excuse me. Gail Hurley. I'm with the Overseas Development Institute, ODI. We have a beautiful picture on the screen in front of us of the sea. So I'm just wondering what the panel's perspectives are on insurance and marine natural capital markets in particular. What are you seeing in this space? Thank you.
I can give you a very practical example, Gail, and Will was sat somewhere over there. Thanks to Will for pointing this out to us. We funded an oyster reef restoration project off the coast of Norfolk, 4 million little spats on bricks back into the sea, creating almost a kilometre-long reef. And insurance felt impossible or very expensive, but thanks to Will's hard work, he found an insurance firm that was willing to say, all right, well then I'll give you that this is a form of aquaculture that we are familiar with insuring, and with a little tweak to the wording, we can make this work for your reef restoration project. So I think, and hopefully Simon will bear this out, that insurance has a massive part to play in marine restoration as well.
That's encouraging. I didn't know about that.
Hi, James Byrne here from Plant Life. We at Plant Life have sold over 11 million pounds worth of B&G units in England. Primarily, a major part of that, and the reason why we were able to get that was because we also were able to work up a conservation covenant on the land, working primarily with landowners. I was just wondering, especially you, Eoin, could you talk a bit more about how important conservation covenant is to tie that in terms of de-risking for the investor, tying the actions to the land for a 30-year period?
This is bad. It's a bad sign when I'm answering all of the questions. Jeremy probably has a better answer than me to this. I think the first thing to say, James, is B&G is a 30-year commitment. Even with the best will in the world, the institutional investors that I represent are looking at 15, maybe 20 years tops. So there's a gap there, and I think that's one area that the likes of Plant Life providing, as a responsible body, providing that conservation covenant can fill to give assurance that whatever is done stays done. There's a degree of permanence about it. But I think it also goes back to giving the landowner comfort that there's the work that's been done can continue to be maintained, And equally, I think the local community who are maybe enjoying that improved habitat. So I think it's an invaluable service.
Jeremy, did you want to come?
No,
Thank you. Amelia from the Lifescape Project. Another one for you, Eoin. Sorry. Just wanted to indulge in that little juicy nugget of we need to reform our entire economic system, because I think that would be nice to just, delve into a bit, especially in the finance sector, because I think there's a growing uncomfortability with how financialized the economy in general is becoming.
Yeah, we do, desperately. It's not going to be me, I'm too old and too crusty. It needs bright young things like yourself to come up with a new system. In the meantime, I'm going to try and make the current system a bit better, but I'm messing around at the edges. Jeremy.
We're going to have a shot at it. Highlands Rewilding, we've had a feeling for a while that we'd like to be part of something bigger and broader, because biodiversity is vital. We all know that. It's existentially vital, but it's just a part of what we have to do in terms of system change. We really have to shift the society we live in from a linear extractive economy, to use the jargon, to a nature-based circular economic system. If we can do that, then we're showing a very different future, and one that has a chance of being survivable. So in a few months' time, we're going to launch a new type of fund that will invest right across what some people call the forestry construction pump. Everything from the nature recovery and forests, sustainable forestry, all the way through to timber-based housing, with all the social spin-offs that you get from that. So many social goods that you get from going to that nature-based, holistic, circular economy. And so, watch the space. We're going to have a shot at this with compadres we have, partners we've built up over the years, and it may succeed, it may fail, but we're jolly well going to have a go at that mega system change.
And I think as well, just celebrating the success of the innovative projects. I think, in my world, that goes a long, long way. I think innovation, there's very few true innovators, but I think people will get very excited if they can see what somebody else has done. I also do wonder the role of rewilding finance, trying to get people to take their blinkers off and actually look at the case studies of novel public-private partnerships and vehicles, and just the way risk can be shared and priced and all the rest of it. I just think without going whole hog systemic economic change, maybe there's a baby step we can take in trying to really milk the money in different ways.
Just a quick one, can I?
Go on.
Build off that. On the positive theme, and Marion talked about efforts to socialise some of these many benefits that we get right across the value chain of the forestry construction pump. We think of it as a nature prosperity pump because there's so many good things that happen. There's a wonderful, brave little housing company in England called Agile Homes, and they have started monetizing some of these social values. What they do is train prisoners towards the end of their sentences in how to make timber-based homes. And this is coming from our, nature recovery land and forestry, sustainable forestry. And they've actually put a value to that. The Treasury has handbooks for how to do it, economics-wise. So you can actually come up with a monetary value. And they've sold the first credits, again, to a law firm. I forget which one. Shakespeare Martineau. They've sold the first credits on social value in training prisoners to make and the value for that, it won't be lost on people, is the reoffending rates. They've been doing this for long enough that they know the reoffending rates go right down when the prisoners have a good job to go to in a nature-based service, and bingo, they've monetized it. So this is the kind of thing we can do. And, you know, there's loads of other things that could be tapped that haven't yet.
Fantastic. We've got 2 minutes left and I've been told to run this to time. Right, so, okay, if you could all speak really fast, we'll get through all 8 questions. No, Sally's running to one of you. Let's go with Sally's.
Hi, I'm Ross Wilson from Community Land Scotland. I do believe that nature markets will grow and provide returns for investors in future. But my concern is that much of the supply of projects for this is expected to come from rural communities in Scotland that are facing many crises with depopulation, poverty, housing in particular. It seems like much of the value generated here will be extracted away from these communities that host the projects to other corporations and large landowners. Do you think communities can meaningfully benefit without significant change in the pattern of land ownership in Scotland?
I think you can. I think though. I mean, we had a few examples today of more of that community project where you can create. In England. I'm not sure if they're up in Scotland, but the landscape recovery projects. That's about getting local landlords, local farms together under collectives, putting a corporate structure above that with the right advice, with the right risk management in place, and then using that as a mechanism to enhance kind of those areas. So, you know, we get a lot coming into us, and yes, you do get the big estates, but I would say equally we do get these kind of more collectives coming together now, these communities coming together where they've put the right infrastructure in place, where they've got the right management and the right business structures in place. So I don't see why, I don't see why there has to be a fundamental change in ownership of land. I think, you know, the mechanisms are there for everybody to enhance from it. What you really need to create, though, is what is the marketplace that they're going to sell this enhancement to, and where is that enhancement going to take place?
It's maybe like a chicken and egg situation, whereby if you bundle things up in an attractive way and promote it to the market, then you'll draw the right money if it's got the creative mindset to consider creative bundles of investment opportunity.
Yep.
I don't know. It seems hopefully we can take steps towards each other. Closing remarks. How about we say we're here in, say, 15 years' time? What would you like to be the outcome, or where the world's at? What would be your desire? What would be your top message then?
From my point of view, I would very much like to see nature classified as a business class in its own right, whether that's a risk class, an insurance class, or a business class. I think we're seeing a lot of potential. We're a global business. We get a lot of global inquiry starting to come through where governments are now implementing offset biodiversity, offsetting types of measures. So I would hope in 15 years' time, we truly can classify nature as a proper investment class, as a proper sector in its own right and generating its value.
Jeremy.
Well, we've gone from a multipolar world very quickly to a disaggregated one. And so really we're dealing with trying to create, at scale, candles for hope, and enough candles for hope that they begin to coalesce and show a way to a sane, survivable future. So that has to be my hope, and history isn't destiny. Maybe there'll be a critical mass where people will collectively get it, and we'll be able to look to a much better future sitting here in 15 years' time.
Here's hoping. Eoin.
We won't be here in 15 years' time because we'll all have fixed it. It'll be a safer and fairer world. The accountants will be here talking about what's next.
Oh, there we go. There we go. On that note, I think we should thank our panel in the usual way.
Thank you.